Hi, this is Dennis Coral, your host of another episode of Well Beyond Numbers. We continue here with Chris Colston, credit advisor with over 25 years of experience in the credit industry. So Chris, thank you for continuing to be here. There's so much information on credit, so many myths, so many things that are changing now with technology, now with AI in the credit world. Things seems to be faster when you apply for credit cards. And now you don't, in the past I recall that you would call the number in the pamphlet and apply for a credit card, and then you would wait a day or two or a week to get an answer from that credit card company. Now it's immediately, right? So that's things with technology that now are faster, but we're wealth advisors. We help clients build retirement and save for the future so that they can enjoy their money for years to come and to do the things they want. But credit is just as important as building a good retirement, because that allows you to do things that you normally couldn't with the limited resources that you have. So what are trends that you've seen in the industry that helps people as they build wealth, as they want to continue to work and build their nest egg for their futures?
What I'm seeing now is a lot of those ideal clients that you just mentioned, Dennis. Some of them are using credit, but a lot of them are not, because they're a little bit more financially savvy. So now they're saving, they're buying things in cash. They don't want to get into debt. They want to focus on their retirement. They don't want to bring like negative baggage, right, until their golden years. But what I'm seeing a lot, the trend, is that identity theft.
Oh, wow.
And identity theft on those type of clienteles, those years that you mentioned. Why? Because they're not using their credit, Dennis. So that person's not going to buy a car because they have a car ready now and it's paid off. They don't need to purchase a home because probably they paid it off or they downsized, they got some money, but their little apartment cash. So no need for credit. So what's going on is that these bad people are targeting those clients and stealing their identity.
Wow.
Because now, Dennis, they can use their information, the client's information, go get a loan, go get a credit card, and the customer will never know.
Wow.
Because they're not using their credit.
Oh, wow. That's
because it's dormant now, right? Because they've been able to transition well enough because of your guidance, and now they're like, we don't need it. And now they become a victim of identity theft. And this is happening a lot, Dennis, in the holiday season. October, November, December, it spikes like there's no tomorrow.
Really?
Spikes. People get creative. And you mentioned AI. These bad people are using AI.
Really?
These bad people are targeting
How
clients.
are they using AI?
So one of the things that they do, and this is one of the first intakes of a client when someone calls me that needs help, strengthen their credit, I look at the names on the credit report. The AKAs. So for example, if you have a client that his name is Dennis Manuel Martinez, it must read Dennis Manuel Martinez. It cannot say Dennis Martinez or Dennis M. Martinez, because then the M can mean Michael.
I see.
And now that Dennis Michael Martinez stole that person's credit because that person's credit says Dennis M. Martinez. So it's AI.
Wow.
So they do an investigation on who's using different AKAs. You see a lot of people like my name, right? It's Christopher. But I go by Chris.
Right.
So now someone can say my name is Chris and steal my information. So
how can they access your information? How can they? Is it when you swipe the card?
It's all data breaches. Dennis, like Equifax had a gigantic one back in 2017.
That's true. I remember that.
So data breaches. And these individuals, a lot of them, when they did those data breach, they were just doing an analysis on whose information they actually got. So that then they could target them 2, 3, 4 years later.
Wow.
Because if you get into a data breach now and nothing's happened to your credit, then your guard goes down, right, Dennis?
Right.
Because it happened 2, 3, 4 years. And then here comes the boomerang and it hits the client. So one of the things that I tell everyone, not just my clients, everyone, so the world right now, monitor your credit. pay the credit monitoring system. It's going to be like $24 a month.
What service do you recommend?
My favorite one, and they became my favorite one after the pandemic because everybody was reporting totally crazy, is Experian. Experian.com is my favorite one. I don't get paid by them, but they're very accurate. They have a great app. They have a great website. It's very easy to understand. And if it's easy to understand, then the clients will be more inclined to use it.
Got it.
There's some websites that are so difficult that you just give up.
That's true.
And that's what they want you to do. They want you to give up, Dennis. Because if you give up, you're not challenging errors.
I see.
You're not trying to better your credit score. So now you're stuck with the average or below average credit score. And now everyone else is making money on you. And that's the way this whole game is set up. This game is set up for us to lose. And you ask me, Chris, why do you say that? Because there's no education, Dennis, about credit or finances. There's no education. High school, college, university, nothing. And there's a reason why, and it's a nasty truth, why there's no education, Dennis. The United States of America runs on debt.
It does.
That's how they make money. So the more debt you have, Dennis, the more debt I have, the more money they make.
Right.
All those high rises, guess who paid for them? We did. You know how you like to get your travel points? You know how you get your miles, those free miles, those hotel points, Dennis?
It's the interest you pay on credit card.
Not the interest you pay, Dennis. The interest that other people pay.
I see what you're saying. And then, as you mentioned in the prior podcast, the average interest rate now it's 28%, almost 29% on credit cards. Yep. So that pays for points. That pays for the 10% discount when you get the Banana Republic card, or when you do, they offer it to you at the checkout register store.
So you don't pay interest because you pay things off right away, but everybody else that pays interest, now you're benefiting from them.
Right.
You are, and also the whole financial system.
On that topic, if I'm working on building my credit, does carrying a balance helps me?
A small balance, Dennis. Just like the previous segment that we had, you never want to carry more than 25%.
So always stay within that 25% of limit increase.
Yeah.
We have clients that they use a credit. They don't use their checking account on a monthly basis. They basically use their credit cards to pay for their gas, their groceries, their things in a month-to-month basis.
Smart.
Let me just say, and they do it for the points that they earn on the credit cards, because some clients have their American Airlines credit cards, some have different cards that different points for different things that they enjoy and they like, which is totally fine. And then at the end of the day, I always tell them, pay off your loan, pay off your credit card.
Yep.
And we budget with them to make sure that they generate enough money from their investments and their retirement to pay for those off. But you mentioned that using 25% of your total credit limit does hurt you.
If you use more.
So if I'm spending $10,000, $15,000, $20,000 a month on a credit card and I pay it off and my line of credit is $25,000, $30,000, is that helping me build my credit?
It's helping you with credit history.
Okay.
But it's not maximizing your credit score.
Oh, I see.
This is where you will be at the 740 credit score, Dennis, and not at the 800. So to be at the 800, you cannot utilize more on any day than the 25% that they give you. So for your clients there, and let me tell you something, that's a smart client that you just described to me, because if that customer is buying everything with a credit card and paying it off at the end of the month, they're actually protecting themselves from what? If someone steals that information of that credit card, let's say a bad person steals it, right? Whose money are they stealing from? Whose money are they stealing? From the credit card company.
Right.
But if somebody steals your debit card, Dennis, whose money are they stealing?
From your own.
Your own. They're going to do an investigation. They're going to return your money, but that could be 5 days, 7 days, 2 weeks.
Right.
What about if you needed the money to make your car payment or your mortgage?
I see.
Now you don't have it. So using that credit card is very wise. But going back to that example, if that client has a $30,000 credit card limit and is utilizing about $20,000, right? That is hurting his credit because he's above that 25%. He's almost at 70, 80%. So he's maxing out. So my advice to him will be contact that company that he's dealt with, right? Mm-hmm. Probably he's been with them for a while.
I'm sure.
They know of him. They know how he pays. And ask for a credit limit increase. Maybe that company gives them from 30 to 60.
I see.
Or maybe you can push it more. I have some clients, Dennis, that you and I know, that have $80,000, $100,000 credit card.
That's a credit limit.
A credit limit. $100,000 on a credit card. I have an athlete that I represent that has a $250,000 credit card limit. And the reason why we do it is not to promote spending. The reason why I'm doing it is to showcase the firepower, the muscles that you have, how financially savvy you are. So when you need to make a business move and you don't want to utilize your own money, right, because you have it invested, then you could borrow money. But when you borrow money, you want to borrow it cheaply.
That makes sense. That makes a lot of sense. So for those clients that you work with that have high credit limit increases, you still stay within the 25%.
Yes.
And by having a higher credit limit, that also shows strength, I would imagine,
Correct.
of you financially.
Correct.
Does having multiple credit cards help you? Like, let's say I have a credit card that gives me a
amount of credit cards that you need to have on your credit so that your credit is strong enough,
mm-hmm.
right? So it can sustain you is 3.
3
minimum.
And
the reason why then is if you only have one, think about it again like in the last segment that we said about friends. If you only have one friend, that friend is always going to be biased. He's going to love Dennis, no matter what.
Okay.
So if you have multiple friends, now you have different opinions. So you need to have at least 3 friends to say good things about you. Maximum is 5.
Okay.
Maximum is 5. If you have more than 5, now you look a bit too dangerous. And what does that mean? You have too much access to money and to potentially get yourself into trouble. Why do you need 6, 10, 20, 30 credit cards? Why do you need a credit card from every single store? You don't need it.
I see.
If you have one good friend that's been with you, that supports you, that gives you a high credit limit, I don't need to have any other friends.
I see.
I'm concentrating on my top 3 or my top 5 friends. So that's very important, but also is the association. Who are your friends? Who are those credit cards companies from? So a big mistake that people do, Dennis, is like if they have a bank, right? So like my bank. I love my bank and that's why I'm there. But now everything that I do is with that bank. If I do that, that is bias. Because again, it's one friend saying good things about you. So you cannot just have 2 credit cards or 3 credit cards with the same bank. You need to have a credit card from one bank, from another bank, from another bank, 3 different institutions or 5 different institutions. So now you have different institutions saying, I like Dennis. I trust Dennis. So now that makes you trustworthy.
I see.
In the grand scheme.
So if somebody thinks that they have good credit because they have 10 different credit cards, that's not really the case. It's really the strength of their credit, the credit limit, the credit history.
Yes. That's what I look for, and that's what banks look for.
I see. So if somebody wants to have a strong credit, they should just focus on 5 credit cards maximum and focus on building high credit limits on those 5 credit cards.
Yep. And longevity.
And longevity. Longevity meaning that they had those cards for a long time.
Yes. The relationship for a long time. And that's going to help them, Dennis, if they're business owners, transition to getting business credit cards, business lines of credit. And that helps out so much. It relieves so much pressure.
Let's talk about that because a big percent of our clientele have businesses. So when you're working with a business owner that wants to strengthen their business credit, they may have good credit themselves. Their spouse may have good credit, or their partner, and they're now going into business. How can they build their credit? Well, two questions. One is, are their business credit the same as theirs because they're the owners of the business, or does the business have to build credit from the start?
So personal credit is personal credit, business credit is business credit. Totally different entities. Like you have your social security number, Dennis, your business has a social security number. It's called an EIN number.
Correct.
Right? So that's the number that follows the business. Now, in the personal credit, you have from 350 to 850 credit score. That's the range. For business credit, it's from 0 to 100.
Oh, interesting.
100.
Okay, so business credit score doesn't go in this like individuals. It goes from 0 to 100.
To 100.
And what's the highest score you can get? 100.
Yes.
Okay.
And I've seen 98s.
Oh, wow.
I've never seen 100.
Okay.
I've seen a 98.
98.
Yeah.
And that's a big range.
Huge.
0 to 100. When you start as a business owner, a company, do you start 0? Or do you start with...
You start like almost barely, you start close to 0. You could probably be at like an 8, a 10.
I see.
You need to have about a 30 plus for a bank to look at you.
I see. So if I'm a new business owner starting again from scratch, I have less than 30 in credit score, nobody's gonna really lend me, or
it's gonna be more difficult. Not that nobody, Dennis, because there's banks for everyone.
Right.
And I'm glad you touched that subject, because in the credit advisory business, right, in my business, you see a lot of people, and most people are reactive. They're not proactive. You and I know many people in the 640 credit score. We know many people in the 580 credit score. And they're okay with it. And why they're okay with it? Because they're still getting their object that they want to purchase. Even if the object may cost more, because of interest, this, that, they don't care, Dennis. It's automatic affirmation. Automatic dopamine hit, right?
Okay.
Because they got it. So now, if you're proactive, that you want to better the credit, you want to better your situation, that is the key way. Because the banks that are available for those clients that don't have ideal
credit,
it's called the subprime lending. So those subprime lending banks, lenders, they always want you to be in subprime, Dennis. They always want you to have bad credit. And I've had many conversations with them, and I ask them, why don't you better their credit? Why don't you give them advice so that they can get out of this? And they go, Chris, if I get them out of it, I stop making money.
I see.
It's almost like what the Rockefeller said. You cure a patient, you have one less customer. Rockefeller said it. So same thing over here. They don't want you to get better because the subprime lender wants to keep you low, because if you have a low credit score, you cannot refinance to get a better deal.
I see. I see.
So you stick with that subprime lender.
Banks and credit card companies don't want to educate you on improving your credit, because by keeping your credit scores low, they can charge you more in interest, and therefore they make more money. So you have to, like you said earlier, learn how to play the system to better off your credit. And these are great tips that you're sharing, by the way, increasing your limit. Now, when you request a limit increase, does that affect your credit?
So there will some banks will run a soft credit pool. Some banks will do a hard credit pool.
Okay.
That means that they're really looking deep into how you're doing. If that happens, you only lose 5 points.
I see.
You lose 5 points. That's the same thing for a business credit card. Anything that you have to get any type of lending is a hard credit pool, right? That they're going deep into it. Now, the great thing about the business credit cards, Dennis, or the business loans, business lines of credit, anything that's attached to a business, it's attached to the business.
I see.
It's not attached to Dennis. So it's really cool, because the business debt is the business debt, Personal debt is personal debt. So let's say, for example, you have a business credit card. Your business runs about $50,000, right, of transactions, of everything they have to do. That never showcases on your personal credit.
It showcases on your business
credit.
Now, speaking on the business, your business credit score, you said it's from 0 to 100. Mm-hmm. Is it the same bureaus, Equifax, Experian, and TransUnion that look up your credit score, or is it a different?
So you have Experian, you have Equifax, and you have Dun & Bradstreet.
Okay.
So again, the one that I like the most is Experian. They have a business division, very easy to follow, super inexpensive. Theirs is not a per month fee, Dennis, it's a yearly fee, but it's still very inexpensive to what you get. And you get to see everything. You get to see the officers of the business, so who has registered, who has power in your business, right? It shows you the address of the business, what address you have used or have used. It shows how many employees you have said you have. It shows your gross revenue. So all that there is important information. So when you go to a bank and ask for a business loan, business line of credit, then all that information has to be correct. And why does it have to be correct, Dennis? 80% of credit reports have errors.
80% of credit reports have errors.
Have errors.
Wow.
And those errors could be 100 points minus for you. That one error could cost you 100 points.
Wow. And when that does happen, if you don't know it, you can fix it. So that's why you need to know your credit score and you need to monitor your credit. That makes sense.
If you don't know your rights, you don't have any rights.
I like that.
You need to know your rights.
You need to know your rights.
And how are you going to know your right? You have to be a student of your rights.
Is that public information, like your credit score on the business side?
Well, you have to purchase it. So you have to log in. You have to put all your credentials, all that stuff, answer some security questions, and then they'll give it to you.
I see.
I cannot look at your business credit report unless you send it to me.
I see. Got it. So that's not public information if you're a business owner.
No.
Your EIN might be available if you register with the state of Florida.
Correct.
As an LLC, S Corp, C Corp. But as far as your credit, that's private.
Correct.
Okay. And the only way you access it is by logging into Experian or one of those companies, pay a subscription. And that's separate than your personal. Oops.
Yes.
So your personal credit score is separate. So at Core Wealth Management, we have employees, we have a team. Our biggest expense after technology is our people, our salary employees that we have. And we have Jonathan, we have Melissa. And one of the things that I did early on is try to have access to a credit card in case I didn't have the funds to pay for salaries, because that was my biggest fear, not having at the end of the month generate enough revenues to pay for the salaries of my salary employees. I don't have the problem. I luckily, knock on wood, never had that problem.
Thank God.
Thank God. But I remember that I was using a bank. I still use the same bank, and they approached me with the idea of having a credit card as a backup. And then their first line of credit was $50,000. Then they increased it now to about $100,000. I've never used it. I never exceeded that 25% because you coached me on that very well. So thank you for that. But I remember that because of that, that led me to another bank approach me and offer me a line of credit that's separate than my credit card.
Yes.
Are lines of credits attached also to, do they help you also build credit score for your business?
Yes.
Even if you don't use it?
Yes.
Okay.
And I love that you went to that line of credit, because I was actually just going to suggest that. I'm like, you need to ask for a working business line of credit. And those are wonderful because it also, again, showcases who you are. So you see, you've been getting recruited to other banks. Other banks are trying to bring you to them, lure you in because of your past great credit history. Mm-hmm. So now other people want you.
I see.
Because you have that cachet, that stardom that you have earned. So now you need to leverage that. So in the future, Dennis, use it a little bit, just use it a tad, use it a bit so that you could show them some love, there's some consideration, and then ask for a credit limit increase on that working line of credit.
Oh, okay. That's a good tip.
Yeah. So let's say you have $150,000 one, you could go to 300.
I see. So some of our clients, they hate paying interest on credit cards. Many of our clients, they hate paying interest, so they pay off at the end of the month.
Love it.
But like you said earlier, it doesn't help them build their credit history or build their credit because they're always using the max credit.
Yeah.
So increase the line of credit increase. On the business side, who benefits when you do an increase? Is it the business or you as the owner?
The business.
The business.
The business is the business credit.
So you're always separate.
Correct. You're just a guarantor. You're the one backing up the business because you're the business owner. So here's a flip side of that. Most people think because the two entities are separated that you could have bad credit and I could start a business and I could start getting business credit cards, business lines of credit, right? Because it's its own entity. No. If the business owner is bad, what makes you think the business is going to be good?
I see.
So you are still attached to it because you're the business owner, you're the guarantor, but that business debt is not going to show up on your personal credit, including automobiles. So let's say you could go and lease an automobile under your business name or finance an automobile under your business name and will not show up on your personal credit.
Why?
Because it's a business. It's under the business name. So now your debt to income ratio in the personal credit just got a whole lot better.
I see.
Because that $500, $600, $700 car payment is not showing, it's not reporting. So now you're a lot skinnier. So again, going back to muscles, you're skinnier, more muscle, more strength.
So when you're a business owner, you highly recommend that if they purchase a vehicle for their business, that they do it under the business name as opposed to their personal.
And it's a lot easier for the CPA as well.
It's a lot easier for the CPA because then they can write it off and apply for things.
Yeah.
But is the interest rate that you pay on a car loan because it's owned by the business higher than if you get it through the personal?
No, the insurance will be higher.
The insurance.
Yeah, because it's a business insurance, right? It's a commercial auto. So if it's commercial, it means that you're driving around more, Dennis. That's the risk. It's going to be, for me, it's $10 more a month.
Being that we're in South Florida and we have a very litigious South Florida residents, if I have a business, if I'm driving my automobile to visit a client and I have a car accident, I'm not related to credit, but that is potentially a factor that why people sometimes don't do it under the name of the business.
What about if the client itself is really wealthy? And if you put under the personal name, they go after everything that the person has.
That's the flip side.
There's a flip side to it.
Yeah.
So usually in your business, you have a higher insurance coverage.
Got it.
Your insurance is a lot tighter because of it. So you'll be a lot more protected. So I actually have clients, Dennis, that have huge firms. They do really well. And even their automobiles for their children, they put it under the business name. Or here's another little secret. You could have multiple businesses, right?
Mm-hmm.
You're the one backing that business up. So you could get the automobile under another business that is not as
that makes sense.
prevalent as yours, but you still put it under the business name. So knock on wood, something happens, it goes to that lesser grossing business, right? The responsibility.
And
this is just higher level.
No, that's great.
Intelligence.
Thank you for sharing that. That's a great, valuable information. So each business that I own as a business owner have to have their own credit score then.
Correct.
Okay.
Yes. And every business that you own, you could get business lines of credit, business credit cards, automobiles, everything the same.
If you were to start your business again today in 2025, how would you start building your business credit?
So obviously hire me.
Okay.
That's number one,
right?
Because it's 25 years.
Yes.
But I would say definitely partner up with the right bank. A bank that understands your business, that has the appetite for you. Every bank out there, Dennis, their responsibility is to give you a loan, lend you money, right? That's how they make money. But not every bank has the same appetite for every single business. So as a financial advisory business, Bank A may not have the same appetite as Bank C.
I see.
You need to find a Bank C that has the appetite because they understand how you work, how the fee structures are at, so you'll be comfortable. So then they can give you a higher business credit card limit or a higher business line of credit.
I see.
Because they understand you. If you go to a bank that does not understand how your business is, I'm not saying that they're not going to give you a credit card. They're not going to give you a line of credit. It just be very small, right? Because they don't know you. They don't know the industry.
Are community banks better for new business owners than bigger banks?
I say yes and I say no. So I love community banks. I love credit unions. I really do. Going back again to the association, a lot of the community banks, their community, their association is not well known, right? So the algorithm does not pick it up
I see.
as greater as a larger top 2, top 3 bank.
And when you say algorithm, you mean the credit bureaus?
Yeah.
Okay, so the credit bureau wouldn't really pick up the financial movement of someone as much as a large bank, a national bank.
They'll pick it
for
up
their credit history, for credit history purposes and credit score.
They'll pick it up, but they'll pick it up as a remedial class,
I see.
not as an advanced placement class.
Oh, interesting.
So think about it like that. Those bigger banks are the AP classes.
I see.
Those not so great banks are your remedial classes.
I see.
You're still getting an A or a B in remedial, but it's not the same thing as getting an A in an AP class.
So their name of the bank and their strength of their financial institution, that makes sense.
Makes sense, because that means if I want to be associated with you, it's because I feel comfortable with you.
I see. Yeah. Well, that's amazing. I think we're going to end this segment with that, because the next segment, I want to talk about myths in the credit world, because I think that's another very topic. People have misconceptions regarding to credit, or think they know something about credit. So we're going to uncover some of those in our next episode. So thank you, Credit, for being here. Please continue to be here. This is Dennis Coral from Coral Wealth Management on a great episode. The discussion is about credit. Stay tuned for our next episode, where we're going to dive into myths and uncover some of the myths about credit that you may know and things that you may always wanted to know about credit. We're here with Chris Colston with 25 years being a credit advisor. I'm Dennis Coral, your host. This is another episode of Wealth Beyond Numbers. And as we like to say at Coral Wealth Management, retirement and financial confidence starts here. Thank you.